to actually start with there was this study out today that everybody was blasting. They're destroying it. Some Texas academic said that crypto, or that Bitcoin specifically, was manipulated in 2017. Everyone says, almost everyone is very skeptical of this study. Nonetheless, for people who are interested in the space, how confident can they be that they're in a transparent industry where they can trust the market movements?
This has been an ongoing narrative in the Bitcoin space since I started 5 years ago as a professional investor in this industry, and it's an ongoing concern around data availability and data accuracy. What's important to note is this is not the first report that's been published by this academic. Last year, this same team released a study around the use of Tether in Bitcoin markets, so this has been an ongoing theme of inquiry for this particular duo of academics. I think, again, what we look back to is most of the data that is used to analyze this activity is on-chain data from the Bitcoin blockchain.
Right.
This is one of the big benefits of having a public ledger, is there's more availability of data to analyze movements between wallets. I think one of the big challenges as Bitcoin market infrastructure matures is activity has started shifting from on-chain to now off-chain. Not every transaction has to be cleared and settled on the Bitcoin network, and many exchanges as well as OTC desks are now in the business of batching transactions. So it's very difficult to interrogate the efficacy and the accuracy of the data, and of course causation, correlation. These are always difficult things to untangle.
So, Meltem, what's needed in terms of the overall coming of age of crypto that will make it more transparent? Is it the options market in particular evolving to a certain extent, more players coming in? We keep hearing about, institutional money is coming in,
sure.
but is there an element that we need the infrastructure in place that will really start to bring the transparency that
I think the conversation you've heard repeatedly is it's really about transparency and trust. I think right now, unfortunately, just given where the crypto industry started and what it's looked like over the last 5 years, a lot of what investors are looking for is that transparency and trust, and it's difficult to find. Part of it has to do with nascent infrastructure that historically has been completely unconnected from the legacy financial market. What's really interesting to me is Bitcoin has its own market that developed completely outside of Wall Street and existing capital markets. And so now that process of integrating Bitcoin with what happens in established regulated financial markets, it's a little bit challenging. I think the second component is Bitcoin is the first digitally native asset we've really ever seen. And so it doesn't always fit really cleanly into the existing rules and regulations we've had. We've seen this here in the US with the struggles to get a Bitcoin ETF launched. We experienced this in our business. We have an exchange traded product in the European market. We're constantly trying to create new product constructions, but obviously Bitcoin presents some unique challenges. So I think it's a combination of developing market infrastructure, changing narrative, but then also just changing rules and regulations, or at least starting to interpret them in a way that's suitable for this new asset that's just fundamentally different.
So that raises the question then of what's next, because I mean, with the success of the crypto space and the awareness of it comes more regulation, also comes more competition. I mean, we've been hearing a lot of chatter now that with the proposal of Libra, that a lot of central banks say, well, we're not just going to let private companies sort of dominate the crypto space. This is, money is our domain. How do you deal with that potential challenge ahead from players that presumably can't be beat?
Well, I think the first thing I would say to that is what I said to Congress is Libra is not a cryptocurrency. I think, again, what we're seeing here, I tend to delineate something like Bitcoin, which in my view is truly cryptocurrency, from digital assets like Libra and potentially central bank issued digital currencies.
Stable coins, like one's pegged to...
Stable coins pegged to the dollar, right? And again, the exciting thing is there's now room for all of these things to exist. They serve fundamentally different purposes. But I think, to me, there's a lot of room for them to coexist together. As we see in capital markets, I come from the commodities space. I mean, that space became digitized. That became an asset class at a time when no one thought it would be.
All right, but you're talking about, and a lot of people in the industry are looking for further clarity and ability to bring new products to market. What if we see the opposite? What if the U.S. says not only are we not going to allow for a Bitcoin ETF, we don't even want banks transferring money to Bitcoin exchanges, and a real state attack, which the network hasn't really experienced before. Is it robust enough, and is the infrastructure robust enough that it could actually sustain that?
I mean, the challenge has always been on and off ramps. Over the last 5 years, I've invested in 157 companies in the industry, and the most consistent challenge across all of those is access to bank accounts.
Right.
And so the challenge is, here in the U.S. in particular, there's been a lot of pressure from the regulatory side, and so many companies are shutting down U.S. operations, as seen by Poloniex no longer serving serving U.S. customers,
Yeah.
being sold to a Asian investment conglomerate that is now going to be taking over the operations of that exchange that was formerly domiciled here in the U.S. I think what we'll start to see is a lot of the markets start to shift to more friendly jurisdictions where there's more consistent enforcement. I think the challenge here in the U.S. isn't just regulatory clarity, it's consistency and enforcement. And so far what we've seen is sort of a patchwork approach where the SEC and the CFTC have had some inconsistency around who they go after and how, and we've seen that with just the vast differences in settlement agreements that have been reached, what they've decided to take forward and what they haven't decided to take forward. So I think in the near term, the U.S. is going to continue to be a challenging market for retail products in particular. On the institutional investing side, with Bakkt launching their physically settled product that's full steam ahead, there's a lot of new funds launching, there's a lot of new 40 Act investment products that are launching. So I continue to be optimistic that in the institutional investing space, the U.S. will continue to lead.